Hi, I'm Jim Jubak, and welcome to my YouTube video for Wednesday, August 30th. You may note that I'm not wearing my usual Toledo Mud Hens hat. I'm in transition. I don't know exactly what hat I should be wearing after this, but this video, when you get this video on Wednesday, I will be in Venice, Italy, not Florida or California, where I'm putting down roots for the next 9 months and maybe somewhere in Italy for the next 3 to 5 years or so. So no other change to operations other than it's been chaos for the last week. I don't think there's a baseball team in Italy. I'm wondering whether the Torino Mud Hens would be interested in a franchise. But anyway, so welcome to my last US shot video. We're going to keep these going, but I'm going to shoot them from Italy and ship them to Katie, who's going to have to piece them together, and we'll see how that goes. Anyway, so today's topic is, once again, the US is the only market game in town. It's August. One of the things that's hard to grasp, it's August, there's a lot of volatility, is what the longer term trend in the market is, because, well, there isn't a longer term trend. Basically at 4,100, the S&P is about where it was a year ago. And one of the things that it's hard to figure out right now is what this market should be priced at. And one of the things that's going to make that very difficult is that, well, for the discernible future, at least 6 months or so, the U.S. again is going to be the only game in town. The U.S. economy is strong. We're chugging along with GDP growth in decent levels, but China is really, really weak. Europe is weak. So once again, we're back in a situation where the U.S. is the only game in town if you want to buy stocks, which means that it's very hard to figure out what the price of U.S. stock should be. I mean, if it's the only asset out there that's attractive in the stock market, it gets bid up maybe beyond where it should be. So if you look going out, there certainly are uncertainties about the U.S. market. We've got the Fed saying yes, no about interest rates. You've got signs that the U.S. consumer is looking kind of shaky about continuing spending. But if you compare that to what's going on in other countries with the real, almost a buyer's strike, consumer strike in China, really negative sentiment. Europe, where the economies are they always grow slower than the United States because that's a choice they make. But right now we're talking about really slow growth. So in this environment, what should a U.S. stock be worth? And that's particularly hard, it's particularly important to figure out right now, because there are a lot of U.S. stocks which you'd like to buy, but you go, hey, Microsoft, record high, Apple, record high, Nvidia, record high, Eli Lilly, record high. Do I buy those because for the next 6 months or so, this is the game to play? Or do I sit out and go, hey, well, on the fundamentals, these are expensive, so maybe I'll just not go there for a while. I would basically say that this is a question that you ought to revisit after the September 20th Fed meeting. The Fed is going to say things about where it thinks interest rates are going to be going for the next year or so. That will set expectations. I think that's a good point where you want to reevaluate what's expensive and what's not in this market. So this is Jim Jubak. If you like this video, please give it a thumbs up. Subscribe to my YouTube channel. That way you get notification when we do our next one. We're doing about 3 a week now from Italy. We don't pass out cookies or anything like that, unfortunately, and I can't give you cappuccino over your internet. You can also get my free stuff on my Jubak Picks free site. That's 3 portfolios. You can get to my paid site, jubakam.com, and that's got 6 portfolios. So thanks for watching, and we'll see you, as they say, ciao.